what you have seen in different parts of the world that you are not seeing in Latin America and the other way around as well?
So I want to pick up a couple of comments from Antonio, from Pedro, from Wiggers. Yes, we have seen rates in the reinsurance market increasing. Is it driven by capital? Yes. Do we actually have an absolute amount of reinsurance premium increase? Potentially not, because you increased your self-insured retention. Now, as a carrier, I'm competing on capital. And if I show, and I think, if you look at the property markets, unless you're a very regional player, most of the property carriers showed in the upper 80s, lower 90s, potentially higher if you include CAT. Now you would say like, hey, you have a 10% profit margin on combined ratio. Actually, you don't. Because with the increased capital requirements for increased self-insured retention, you're taking a higher capital load, which you're competing against with other lines of business and other industries. The increase in interest doesn't help because there's an alternative to place your money somewhere else. Picking up on what you said in Brazil, Brazil was perceived a non-cat market. Actually, it's not true. If you take a look at Chile, Mexico, Ecuador quake, and you take a look at the history, perception was, yeah, there's the occasional large loss, but that's what we have reinsurance for, but there is no frequency. That changed. And what I see, especially in the Latin America at this point market missing, is the recognition that CAT is real, the recognition that CAT is not just modeled, and the recognition about other patterns that cost money to insure. Do I see different changes in the UK market, in the European market? Yes, I do. If I were to move to APAC, I clearly see it in Pacific, but they have been hit. This year was flooding in Auckland. That's an area where it's not supposed to rain that much. It did. You take a look at the last 2 years in Australia, it was basically constantly underwater, flash flooding, not traditional flooding. So Pacific recognized that. In Asia, it's not. If I look to Latin America, the recognition, CAT, civil unrest increasing, and it costs money and it costs capital to insure that, is yet missing. I think that drives also the expectation of the market, where it goes, and rates is one element to fix it. Can you fix everything with rate? No, you can't. It's basically what is the amount of budget you have available as insured, and how much can you buy for that. Yet, I also agree what you said, some of our competitors or some underwriters have not fully recognized that and still looking for the top line growth. Yeah. And it's a recognition, change in capital requirements, lesser availability, higher frequency and severity drives basically the capital requirements.